Back to what we were talking about though for the market. So ADP guys, private payroll jobs came in negative net 32,000 jobs as opposed to a 47,000 job increase. Somebody's going to get fired from the Bureau of Labor Statistics. But what does this do? What does this mean? Well, that's not good for the economy, but the market and the economy are not the same. Why is this somewhat bullish for the market? Well, because what it means is that the Fed, any Fed chair or governors or board members who are on the fence about rate cuts or pause based on labor market conditions because of delayed data are going to have to look at this and have to go lean more towards a rate cut. People that are on the fence because of inflationary issues, that's a different story. But as far as labor market, this is kind of it almost forces those people's hands to a cut for this month. And so what does that do for the market? Cheaper money, more people investing, more people spending, more people buying, more people, it's bullish for the market right now. So that's kind of something that you look at in those terms. So yes, net negative, 47,000 private payroll jobs is not good for the economy necessarily. But if it's something that kind of moves the line for the Fed to have to cut, then that's going to be more bullish for the market right now, especially for IWM, Russell, spec growth stocks and stuff like that. So that's why you're seeing, despite the market drawdown today, we're seeing Poets up 17%, MNTS 12%, EV goes up 3%, We Ride 3%, Chewy's up 1.5%, Celsius had good news this morning, they're up 2.5%, Plugs up 2%, EVTL, by the way, guys, I think we nailed that one. I mean, technically, if you sell it now, you can say you did. If you didn't, then it's kind of like up in the air. But we got into EVTL. We opened up a swing trading position on EVTL on Monday because the insiders, the executives, increased their holdings by 50% last month. And so, this wasn't one executive or two executives buying whatever. The entire board, like the executive teams, increased their holdings by 50%. Usually that's not something of let's make the company give confidence to investors. We think this company is we're gonna move up in price for whatever catalyst, whatever reason. So we bought into it. We're up 16% on shares in just 2.5 days. Man, I have $200,000 cash. Any suggestions? Everyone on Reddit is a scammer. Just put it in the fucking total market, bro. You don't have to buy individual companies. Are you trying to gamble? I did a video and I did this a month ago. If you put a gun to my head and told me you had to buy 3 stocks for the next 5 years based on everything you know right now, it would be Google, Sofi, and Realty Income. That's what I would buy. Strong, speculative, aggressive, defensive divvy real estate investment trust that pays out a monthly 0.5% dividend compounding. That's what I would do. What about Walmart? Walmart would be probably number 4, number 5, just because Walmart is I'm playing 2 fields there. I'm playing the United States and the emerging market of India with that. I would say if you don't want to do dividend, I would say Walmart would be a good replacement. So that's a good point you just made. If you wanted a company that wasn't just a dividend, a defensive dividend stock, I would say Walmart would be number 3. Just my personal opinion. Now, we've been screaming from the rooftops about Google for 2 years now. I mean, and SoFi, man, we fucking loaded up again in April when it went to $7, $8. We bought the dip on Walmart back when it had that earnings miss or the tariff thing when it went down to 70 something dollars. So even though my average on Walmart post-split was 33. Next, likely to see an uptick with your same hypothesis about insider buying. God bless. I already sold next for a win. Any thoughts on Charles Schwab? I mean, Schwab's probably going to go up. We have retail traders and investors and people opening brokerages at record amounts, and assets under management for a lot of these companies is just hitting new records. But I feel like Schwab has done a very shit job of catering to younger people who are going to spend the rest of their life dollar cost averaging and putting more assets under management. While TOS is still a well, used platform for traders, there's so many alternatives out there and they're not very UI friendly for new users. So I don't feel like they're going to melt up with assets under management, period. But I feel like something like Robinhood, Webull, eToro, and what is it? Huya or whatever. No, who is it that owns Mumu? Fufu, whatever. Those are probably better options because they also have crypto and and the amount of crypto, trading and stuff like that, you're getting all of those fees as well. So I feel like Schwab is on the way out. Now, listen, I am someone who uses TOS to day trade every day. So I am a user of Schwab. So I have my SEP IRA through them. I have a trading account through them as well. So I use them. But here's the thing. It's a problem that I get into all the time. A lot of companies, finance world, want my audience, but they don't want me. Now, what does that mean? Well, they don't want to partner with scammers. They don't want to partner with pump and dumpers, course sellers. They don't want that because it's a bad look, right? Those people get exposed and it looks bad for them. I have a brand where I don't do any of that. I'm genuine and whatever. And I have the retail audience. They need the younger people. They need younger people because the finance world wants to get you when you're younger, because once they get you there, they make way more off of you in a lifetime ever per person than they could, some company that sells fucking a product, right? They sell the product. So, they want that younger, they need it. They need it because the boomers are dying off, right? And Gen X is going to inherit a lot of that. Millennials are going to inherit it. And a lot of them are going to liquidate that shit because they need to pay bills or because they want to pay off debt or whatever. They're not just going to leave it in those accounts, right? And so when they transfer out of those accounts, they're going to put it into accounts that they're familiar with. And on top of that, younger people that are now getting into the market and getting money and learning about this are going to go to stuff that is easy to understand, gamified user interface, right? Like these other ones. And so these legacy brokerages are going to see less and less and less inflow over time. And that inflow is what allows them to continue to grow and management fees and make all that money. Not only that, but the trades and transactional fees. So they want the younger audience. But the problem is that they want to get the younger people using an older model. The finance world is one of the last ones to modernize. They don't want to break away from the legacy model of telling people, showing a skyscraper, a scene of downtown New York City, and then the Wall Street Bull, and then they want to show like the stock market exchange floor, and then they want to show somebody that's in their 6-bedroom home, just like by a fireplace and playing golf with a fucking sweater over there. That's what they want to do. They want that image. But they want people who don't want that in their life. And so there's a problem. So they don't want to, but the problem is they're like, but this guy, cusses and he makes mom jokes and he sometimes day trades, shit penny stocks for fun. How do we get the younger people without doing what we need to get the younger people? And that is going to be their downfall because there are companies out there that are like, nah, fuck it. We need to get these people. We need to find the right people for them. This guy isn't going to do anything that's going to cause us to have a fucking media problem, but at the same time he speaks to this younger audience, right? Like, and I say younger as in like people and up to 40 or 50. So that's why I say something like Schwab or TOS and Schwab and E-Trade and those guys, they're dying out. They're not going bankrupt. They got shitloads of money, right? They got money that's been sitting with them for 20, 30 years that's exploded. But as far as like growth potential, I feel like the ones that have, that's why I love Sofi so much. Sofi has been like, nah, fuck it. We're going after these younger people. Because once they get with us, they're going to be with us. We're going to give them more money and interest rates than everybody else, right? Chase is out here giving 0.026% on your savings account. Sofi was giving 5.5%, right? Because they want to get you locked in. And they're working on this whole thing with student loans. Why is the like we talked about with the big, beautiful bullshit bill, is that they're going to cap the amount of money people can take for student loans from the federal government. And if that's the case, we know that colleges aren't going to cut down their tuition prices. So what are they going to do? They're going to have to get supplemental loans. Well, who are they going to get it through? Well, guess what? Sofi, who you're with and you've been with for years, is telling you, hey, are you a student? Hey, you need loans? Lock in this good rate now. Be a special rate because of a customer. We'll do it for you directly. Easy, no hassle. Nobody's going to fucking be like, oh, let me go check with all these other companies. No, they're going to be like, all right, fuck it. It's already with my account. And so you have to understand like that's how it is. Like you don't grow nowadays by word of mouth. You don't grow nowadays because of shit like that. You have to grow by finding your audience. You have to go out and find them. They're not going to come to you anymore. And so that's why all these companies try to do all these stupid, weird viral marketing tactics, because all it takes is one hit and they do well. Fuck, we made money off of McDonald's going into their earnings last year. We saw that stupid Grimace shake, and that fucking purple Grimace shake went viral on TikTok. And we said, hey, I think that's going to give some unexpected sales boosts. And so we took calls to those earnings and shares to those earnings, and we nailed it. They even mentioned it in the earnings call. These things are massive nowadays. So then why doesn't Sofi sponsor you? They don't have to. I did a Sofi sponsorship actually back in the day. Wait, have I been without my when does my NDA with my last agency end? Hold on.